All right, welcome everyone to our first virtual home buying seminar for 2026. My name is Dan Sugg. I am the Chief Mortgage Lending Officer at Michigan First Mortgage, and we are pleased to bring you one of the probably the most popular topics that we've ever done here at Michigan First, and that's the first-time home buyer. And we are going to walk through the agenda now. So like I said, my name is Dan Sugg, and I'm going to introduce you next to our speakers. We're going to cover our topic today, first-time home buyers. And a special treat is we have a recent member, not too long ago, that closed, that will be sharing a testimonial with us today and their experience in the process. And then, of course, we'll have some closing remarks. So let's jump right in if we can. Our first subject matter expert is Kieran McDonald. He's a loan officer with Michigan First Mortgage in our Rochester Hills office. Kieran is relatively new to Michigan First, but certainly very well versed on this topic. So Kieran, tell us a little bit about yourself and what brings you to our call today.
Absolutely. Yeah. Thank you guys for having me on again. My name's Kieran McDonald. Like Dan said, I'm a loan officer here at Michigan First in the Rochester branch. My main goal, a little bit about me professionally, is focused on helping people move from uncertainty to confidence, because I know that this is the biggest purchase that a first-time home buyer will have made in their life. So my main goal is to be clear on communication. I love building trust as early as I can. I don't want to be doing this process, as someone that you don't trust, know, or like. So that's something I truly emphasize. Extremely honest numbers. I love being upfront in the beginning, give you good expectations rather than thinking that it's a bit sweeter than it actually is. And really just, furthering that point is making sure that the buyer completely understands the full picture. So not just what they're approved for, but truly what makes sense for their life. And as you mentioned, I'm fairly new. I joined Michigan First in June, but it's pretty obvious that it's an easy place to believe in. The culture that I've experienced up until this point, it's centered around what's doing right, great communication between each other, and really what's doing right for the members, not just chasing those numbers. So
yeah, and homeownership, like I think you emulated there, is a journey. It is not something you just wake up one day and say, I'm ready to buy a house, let's go do this. Certainly it is a journey, and for somebody that's never had that experience before, they need somebody to guide them through that, not only through the financial part of it, but through the real estate process too. And we have Emily McKinney joining us from Keller Williams Lakeside, and Emily has been gracious enough to share some time with us and offer her expertise to us in walking through this kind of next level dive into what it means to be a first-time home buyer. So Emily, tell us a little bit about yourself and what you bring to the call.
Yeah, so my name is Emily McKinney. I work out of Shelby Township. That's where my office is at, but I will travel very far, for the right client. I will go Macomb County, Wayne County, Lapeer, Oakland, and others as well. And I've been in about this for about 2.5 years now, and I absolutely love it. And, the biggest thing that I bring to my clients is just fully being communicative with them, as well as just walking them through the process from start to finish. As soon as they will let me do that for them, I always, want them to come to my office and meet me and really understand, I'm a real person, and I'm not only your real estate agent, but I'm also your friend. And, if things happen, I just like them to know that, they can communicate that. And, I will do my best to make sure that the whole process for them is really just going as smooth as possible. And if they do ever need to be in touch with anyone else during the transaction, that I can be the helping hand to, pair them with that person.
Yeah, listen, if it were easy to buy a home today, we wouldn't need people like Emily and Kieran. But I think building those relationships and walking through that commitment of buying a home really helps to have some industry experts on your side. So I also would like to welcome Zareen Torrey to the call. Zareen is one of our sales leaders here at Michigan First, and certainly is a big part of why this medium happens, she does all the planning for us. So she's going to join our call today. And of course, we talked about Andrew being our most recent. So he's going to listen in, and then we'll have some testimonial and talk from Andrew at the end. So, all right, let's just jump right in. So last year in 2026, 52% of our purchased business was first-time home buyers. Certainly a big part of what not only in the industry, but here at Michigan First, it means to us. And I think the credit union is really built on serving our members, and I think we're probably the best place. I may be biased, but the best place for a first-time home buyer. So I guess maybe start with Emily. If we talk about, if I'm newer to the home buying scene, I know we talked about this being a younger person, but it doesn't have to be a younger person. We define a first-time home buyer as somebody that hasn't owned a home in the last 3 years. And I don't know, Emily, what are you hearing is the average age of somebody first buying their first home?
What am I hearing it?
Yeah, what do you think that number is out there today?
Well, they're saying the average is reaching far into 50s and 60s, but
yeah.
I have had clients that are in their 20s and, fresh out of college, and they get their job, and that is just not the case anymore, that you have to wait that long, if it ever really was that case. Yeah. But, it makes people have less hope that it's ever achievable for them, and that's not the case. But, it really is just reliant on if it's right for you, if it's the right time, if it's something that makes sense for you financially, and if you're ready to start building that wealth for yourself.
Yeah, and I think the first step is reaching out to somebody like Emily or Karen and doing that evaluation for yourself. Certainly the average age, I think, in the industry, the numbers that I see through the Mortgage Bankers Association is somewhere in the mid to high 30s is what they'll tell you, somebody buying their first home as an average. I think that number has gone up recently because of the higher rate scenario we've had over the last 3 years, and maybe some of the limitations to the down payment assistance programs that used to exist. That number kind of went up, and to be honest, consumer confidence. People didn't feel like they were in the right space to maybe buy a home. So, what is the thought process somebody goes through when they're thinking about getting their own place?
Absolutely, and I've had this conversation. My brother is engaged. He's getting ready to move in with his wife once they get married. And I'm like, come on, give me some business, right? But, he's more worried about his individual situation. So, obviously different individuals have different priorities or different situations that they live in. For me, it doesn't not make sense to rent. Where it gets tricky is how long you're renting for. So it's totally acceptable if you want to get out of your mom's basement and go live downtown Detroit for a couple years, right? But I don't think that the priority should be just living on your own. There's greater benefits from buying a home that you can get if you do it. So example is, building equity over time. Real estate will appreciate over and over again until the day that I die. And to be able to get into that at a young age is a really strong thing that you may not know that you're able to do.
If you think about it, I mean, interrupt, but if you're thinking about it, like you just made an analogy of somebody moving down when they're maybe right out of college or right, kind of finding their French freedom. If somebody would have given me the opportunity to buy a home at the age of 21 when I was fresh out of school, it probably would have been disastrous. Like I didn't have the mental gymnastics to make a monthly mortgage payment, a commitment. I could barely scrape rent up. I had roommates, so certainly it's not for everyone. It's not an automatic thing. We say a lot here that buying a home is a privilege, something anyone can earn, and we work really hard to have somebody earn that right to buy a home, but it's not a right. Like it shouldn't be. You should be thinking about this as a really long commitment to gain all the benefits you just mentioned. I think there's a stat out there where it says an average renter after 5 years and an average home buyer, so if Kieran buys a house and I rent, we're the same age. After 5 years, Kieran has 40 times the net worth that I do by renting, because I just to rent. So. But you have to make sure that you're you're mentally and certainly prepared to get into that commitment and start down that. So
Absolutely. That's an underrated part of home ownership. People, like to think about it as all blue skies and rainbows, but it's you know, things happen. Thermostats go down. Oh, you got to get a new furnace. I mean, that's the hard part about home ownership is being able to keep up with some of the unforeseen or variable changes that happen.
Emily, when you work with, let's say somebody buying their first home, how's the conversation go when they're deciding where and when and how much? How does that really work in the real estate world?
Yeah, so a big part of my duty is asking them those questions because, I can't answer it for them. So when we sit down, there would be no point in me saying I have a new client if I didn't know their motivation. That's the first thing, we ask is why do you want to move? Or if it's between purchasing and renting, how long do you want to be there? Like, he had said the time that you expect to be there can really kind of dictate where I'm going to guide you as far as purchasing or renting, as well as just, your overall goal with being there. But to further like answer your question about, what do I tell them about where? That's when I would just say, what's important to you? Are you trying to be in a certain school district? Are you trying to, stay in a neighborhood setting, or do you want to have more land and more privacy? Because that's greatly going to change, the cities that I start recommending to them if they are that open. If they do have kids, more likely than not, that's kind of going to be the deciding factor as to where they want to be. But if they don't, then we kind of have more flexibility. But it all comes down to what they're looking for, and then I can kind of dictate how I guide them.
Yeah, and I'm certain price range has some certain filter on that too, right? I may want to live
Yes,
in
yes.
Birmingham, but I can only afford Roseville, and certainly how I get to Birmingham is through Roseville sometimes. In that, the average. I think I just shared this with the team this week. The average length of a mortgage historically has been 7.2 years. So either you move or refinance or change jobs or something happens that you upgrade or downsize in 7 years. But that now, because of the scenario we've been in, is closer to 9 years. So when you have to think about when you're looking for that first home, that you're probably going to be in your home about 9 years or thereabouts on average. So it is something that should be considered. So Zareen, what do you find, and I'm going to pull Zareen into this conversation, what are you finding with first-time home buyers today? What is important to them in this process?
I'm going to tell you, I was actually speaking to a first-time home buyer the other day. She currently lives with her mother and is itching to get out and get her own place. So I was talking to her about her needs, her wants, the process. She's a little bit nervous, but she's truly excited to start the process. And making a comment to Emily, um, she came to me and said, "Hey, I want to live in Detroit." And I said, "Well, why do you want to live in Detroit?" And she's like, "Oh, because I think, that's the area that, I can afford a house. It'd be a great place. I love Detroit. I can go downtown." And I said, just from my own experience, I am not a first-time home buyer. I have lived in Canton and Brighton and Pinckney and West Bloomfield. And when we decided to move to our new house, it's a process, right? You may think you want to live in Detroit, but then you're going to realize, well, geez, I want a house with a garage. Or, hey, I want to have a big yard for my dog, and maybe I can't find one. So, one thing that I was really trying to explain to her is that the first thing is so important to get a pre-approval and figure out how much of a house you can afford and what that looks like, but don't limit yourself to an area because you'd be surprised that, hey, I may want to live in Royal Oak or in Oak Park because it's closer to a park for my dog or it's closer to work. It's a process. But coming into as a first-time home buyer, it is scary, but it's probably going to be one of the best decisions you make because it's a long-term investment. And I deal with a lot of 20-year-olds. I deal with a lot of 90-year-olds who are also first-time home buyers. And you're never too old to buy a house. It is a scary thing, but I'm telling you, it's probably one of the smartest things that you'll ever do, in your financial life. So.
Yeah, certainly. Kieran, Zareen just brought up a point around maybe a little bit of a misconception. So when I was looking for homes back in the 40s, no, when I was younger, but it always was like you had to have 20% down, or there might have been an FHA program, but boy, there just wasn't a lot of that being done in my area. So what would you say that's still the case today? What are most of first-time home buyers coming in with and looking to buy homes? What percentage down?
Yeah, no, I think you were looking in the 50s, so give yourself some credit there. But I'm kidding. 20%. If in all honesty, all the applications I've seen, I would probably attribute 10% of them putting 20% down. For example, for first-time home buyers, they can be overlaid with the FHA, as you mentioned, but right now, conventional, you can go down.
All right, wait. You said MISTA? What is that? I don't know what that is.
So MISTA is the Michigan State Housing Development Authority. They offer $10,000 of down payment assistance for first-time home buyers. There are some different aspects to it. So there are income limits, which that might make you believe it's only for low-income borrowers. That's not the case. I see 1 to 2 person household in Detroit, I think, is just above $120,000. I don't know about you guys. That's not low income to me.
Right. Yeah.
So maybe not your $250,000 a year guys. They're not going to qualify. But there are options for a lot of people, most people. So this is one of my favorite programs to do. As a younger guy, these are my peers a lot of the times for the younger first-time home buyers. So I like to thrive. I live in this space. It's a fantastic program. We're seeing the rates for MISTA go down. I know they just changed again. So if you have the exact $10,000 right now,
6.375 on a 30-year.
Exactly.
Beautiful thing. Very competitive.
And it's awesome. There's targeted and non-targeted areas. So if you make less than the income limit, but you're not a first-time home buyer, we can actually waive that requirement if you're going into a targeted area. So kind of like what Zareen was saying, if somebody's looking for Detroit, the whole city of Detroit's a targeted area. So you can get down payment assistance for then. If you have assets and you don't need down payment assistance, you could do the interest rate without DPA is 5.75%. So it really is a fantastic program. We're like I said, it's something that I give presentations on to different offices. If that's the first question I ask a client, if they're purchasing, is, are you a first time home buyer? Because this is the thing I'm thinking of.
And MISTA's, I would call MISTA the Michigan State Housing Bond program. I would call that one of the best kept secrets that is out there.
Absolutely.
A lot of times, unfortunately, lenders in the market make it much more complicated than it really is. Mm-hmm. So certainly it can be very confusing. So let me go to Emily for a second. Emily, do you see a lot of people coming with knowledge about MISTA, or is that something that you have to work with one of your lender partners like Kieran to educate them on, or how does that work?
They don't know about it at all. They have no idea what it means, and a lot of them don't think they'll qualify, or they just have a bad outlook on it overall. Yeah. They see it as, you're calling me broke, and in reality, we're just trying to make you have an affordable option so you can own something right now. And I feel like expressing that is very important too. It's the way you say it, it's the way you describe it. But I have had a client who brought $0 to the closing table, and that was only one, but the other ones they're very low, but in his case, it worked out for him. We were able to negotiate to get him concessions to cover the rest. And then the MISTA just covered it all. So he was able to get to the closing table without having to bring money there. And the only thing that really came out of pocket for him was the inspection. So stuff like this, I mean, it really is life changing when it comes to can you afford a house or can you not? And in someone like my client's case, I'm not going to name his name, but that made the difference for him. So it can definitely do it for other people.
Both of you talked about meeting with clients and evaluating their needs and seeing where they're at in life and seeing if they're ready for that commitment. This is just a tool to accelerate that conversation. Like, while you may be mentally ready to do this and your finances are getting there, this is one that will help accelerate that goal of home ownership, I think, provided it meets all those. So
absolutely. And kind of going back to one of our first conversations is the increase in the average age of a first-time home buyer. That's not just because people don't want to buy homes. There's a huge problem in affordability, and a lot of affordability is with your down payment. So if there's something out there that makes that down payment less, it's a fantastic program, and I couldn't say it enough. I love MISTA. So
yeah, and that's just one, right? There's a number. Straight FHA is 3.5% down, and certainly there is nothing wrong. Same scenario for a first-time home buyer putting money down on a mortgage. There's nothing wrong. You don't want to put all your money into it. To Zareen's point, part of housing affordability is stability. So once you're in it, remaining successful in that mortgage and planning for your gutters leaking or your fridge breaking or you sprain your ankle and you're off work for a week, and you miss a paycheck, you don't want to be unsuccessful at mortgage because it can pile on pretty quick. And oh, by the way, well, I'm sure we'll talk about this later, but a year into ownership, your taxes are going to reset. You're going to have additional things happen in life that you have to plan for, and navigating all of that up front and understanding and preparing for it are certainly super important. So let's talk a little bit about, and I just want to touch on this a little bit because we are in the business of selling and doing mortgages, but there are times when renting makes sense. So maybe Emily, from your perspective, when do you, not that you would ever advise somebody to rent, but certainly you can see scenarios that might make sense. What do you think around that?
Yeah. Well, sometimes I would advise them, but if it's right for their situation. So if they tell me I am only going to be in Michigan for 3 months, I just need a place over me. I don't want it to be a hotel. I then will go tell them, let's maybe look into month-to-month rentals. Because that, no, I would not go recommend that you go get a house, because when you try to sell it, the equity will not be there for you. But as far as just if it's not the timeline, then, I would look at, have you tried to get pre-approved and how did it go? If it was the lender telling them, they need to build up their credit for another year, then I would say, renting may be an option if you do not already have a place that you can stay at where you don't have to, quote unquote, throw that money away. But when people do say is it just throwing money away if I rent? I kind of say, what is it to you? If that is the only option that you can do, if buying is not something that seems reasonable to do right now, because you're only going to be there for a few months, or if you couldn't get approved, then I would not say renting is throwing your money away. I would say you're choosing your best option right now.
Yeah. And it's keeping you kind of, I guess, liquid in that housing market to when it is right, you're not locked into a long-term mortgage that maybe you have to move or relocate or do all these other things. I love that analogy. Kieran, from your perspective, how do you approach that when somebody says, hey, I don't know if I can get pre-approved or not, but I'm thinking about renting? What is the kind of the questions you ask to walk somebody through that thought process?
Yeah, no, I actually had a borrower call me a couple weeks ago about it. She's a new grad. And so maybe that income wasn't there, the savings wasn't there, maybe the how long you've had your job wasn't there. So that's something that is big on my end. Typically has to do with what they have in their savings. So I'm not going to put somebody in a position that completely wipes them out. That's me personally. I will let them know, look, it is approved, but I don't know if this is feasible for you. But if somebody's asking me renting over buying, the first thing I do is just apply. Let me see, let me run different situations. We have a great support system here, where I can ask for help if somebody's got advice on what to do, and I can play with some numbers to see what makes it affordable. From then, it's either, yeah, you can move into a house, or B, here's your plan. Oftentimes that's credit improvement. Being in this industry, we know quite a bit about credit and what to do to increase it. So if that's something, I will send them a document that I have saved to my computer. This is how you build your credit. Let me check back in 3 months. Or if it's a debt issue, if they have too much debt compared to their income, which I know we'll start talking about debt to income ratios here in a moment. If that's the issue, then it's another conversation of what their plan is moving forward to put themselves in a position to buy in the future. So that's how I look at it. Not so, I'm not here to rush you into a deal. That's part of being at Michigan First, is that we want the best experience and the best situation for the member. So that's why we work the way we do. And so for me, it's just having that initial conversation, figuring out what the issue is, if there is an issue, and then going from there and planning for the future.
Yeah, we've had, certainly you can come up with a million different analogies, but somebody recently divorced. They're coming out, they have
Right.
to split marital assets. That's not been done. They can't really do anything for 8 or 9 months. They're obviously going to need to rent somewhere. You can't just run out and take on more debt before you're even finalized in that situation and settle your life down a little bit. So there's definitely, but I think to your point, and both of you made this point, I think this isn't like, hey, I want to buy a house, I'm going to close tomorrow. It could be an 8 or 9 month process to go through to getting this. And taking that prescriptive advice, both from your realtor and your loan officer early on, and applying that to your situation and maturing in your decision process, working on those what if scenarios. What if I do this? What if I do that? And get to the next point, I think is paramount for people. So it's never no, it's not yet. That's right, not yet. But we can work toward that yes or that ultimate goal. I've heard stories just on our team recently of 3 and 4 and 5 years from initial meeting to closing on a home, and there's a lot of things that can affect that along the way, but that's okay, because that increases the odds that you're going to be sustainable in home ownership and continue to grow and mature in that path. So you touched on a little bit. So let's talk a little bit, Kieran, and we're going to come to Emily next, about what is all this stuff? Debt to income, gross, what do I got to do? Somebody said they want to pre-qual me. I mean, just kind of walk me through. I'm a first time, I want to buy a house. I'm just starting my career. I moved to the area. What do I need to get you to get pre-approved? How does that work?
Yeah, so it is a process. I mean, I think we've said that 10 times by now.
Let's role play. What do I need to do here? So
right. So if we're on that call, what I'll do, we all have days that we need to attend to. So the initial call that I want to do is to make sure that what the process is. So I'm asking about where you want to look. Where are you looking? What's your price range? Or are you looking, for a certain amount that you can get approved from? We talk about income. While you don't need to make $1 million a year to own a home, you need to live within your means and be able to afford your home. So that's something that we'll talk about, is what do you do for work? How long you've been there? We need to see 2 years of work experience. So that's something that I'll try and get on that initial call, is how long.
What if I just graduated from college? What about that?
And that there are options for that as well. So I'm actually working with a client right now who's doing that. She's had paid internships over the last couple of years within the same field. She went to grad school for marketing, and she's doing marketing now. So there are different, it's not end all be all, right? I can get a letter of explanation, to show this is what I was doing. This is why I haven't been working for 2 years. And that can be, the replacement. So if this girl who's been working for, or this woman who's been working for 7 months now. She was a marketing major as an undergrad. She did multiple paid internships, and she went to grad school for marketing. That's a letter of explanation that I can get to kind of suffice for that the lack of work experience.
Yeah, they do treat secondary education as like your path into your career. So that's explainable. I think if I was a welder from 19 to 23 and then I decided to do medical sales,
right.
Yeah, I'm going to need 2 years of medical sales
Right.
before I'm eligible to purchase a home. So
we would like to see some sort of consistency.
Yeah.
It needs to make sense, right? It shows what you've made in the past, the growth in your income, and it shows consistency, and that's the game.
So are you comparing what I owe to what I make? Is that what you're doing?
Yeah. So when you have debt, you typically make monthly payments. We'll call these monthly obligations. Typically what we'll do is take your monthly income and divide that by your monthly obligations. So your monthly obligations can include your student loan payments, your car payment, private loan payments. It also includes your credit card. So if you have a credit card balance, we take your minimum payment and add that into your obligations. What we see for MISTA, since we've been talking about MISTA a lot, is that needs to be 45% or lower. 45% is on the high end, and there would need to be some sort of compensating factors for that. Like if you have great credit but you have high DTI, that's something that we can work around. But DTI is one of the biggest impacting
What's
factors.
DTI mean?
Debt to income. So yeah, debt to income ratio.
That's a technical term for
Exactly,
comparing my debt to my income, right? So,
exactly. So that's your monthly income divided by your monthly debt obligation.
All right. So I make my gross is let's say is just for round numbers is $100,000 a year. Do you use that, or do you use after tax? How do you figure that?
Right. So we use gross. Yeah.
Okay.
We use gross.
So whatever my gross monthly income, that percentage. So let's say 40% of that income is what would go calculate to my total debt, right? Includes my car payment.
Yep.
What about like non-reoccurring debts? Do you count like cell phone bills or anything like that, or car insurance? How does that work?
So it kind of depends on how somebody pays for that. I've seen credit reports where we have to include it because they self-reported it on their credit report, and they're using credit to pay for it. Otherwise, if that's something that you do out of pocket, I know for my car insurance, it's I pay my premium. I don't have that associated with my credit, so that's not an obligation.
Generally
unless,
not included.
Exactly. So there are ways it can be, but most times no.
Okay, and then real quick, if I'm going to see Emily tomorrow, am I asking you for a pre-qual or a pre-approval?
If you're going to see Emily to search for homes, or just to see if you want her to go,
I want to buy a house, so
you want a pre-approval.
Okay. What's
what
the
I
difference?
say is, the difference is, it's hard to, differentiate sometimes. So it's a pre-qual is kind of an estimate based off of what you tell me. So that's kind of what I do in the initial call is I'll ask about what you're looking for, what your job is, what kind of assets you have in your credit. That will allow me to understand if you qualify for a program. An actual approval is different because I'm going to need documentation to prove the assets you told me about, to prove the income you told me about. We do a hard credit pull to look at 3 different bureaus to see exactly what your debt trade lines are, to see exactly what your credit score is. So a qualification is if you fit that, that general umbrella of what the program is, and an approval is, fully documented, verified, and that's the difference. So if you're going to Emily after speaking to me, you're going to want a pre-approval, and I know Emily's going to be happy I said that. Yeah. I tell my clients, you don't go Ferrari shopping without Ferrari money. So if you got your money, right here, look, this pre-approval sheet tells you I can afford a house for $160,000, loan amount this much, interest rate this much. That's telling sellers that you're a legit buyer and they're going to take you more seriously. And I know Emily can speak, more strongly on that point.
Yeah, and there's a couple of things to take into consideration that may affect that pre-approval amount, right? So if I'm buying a condo, there's some fees that you have to include in that that wouldn't normally be in a house, and vice versa. So certainly understanding and working with both your partners and understanding that process is certainly important. Utilities is not something that goes into that calculation, but it is something you have to pay every month. So certainly understanding what those might be, whether the water is included in that bill, and all those different things that go along with that. So, and then lastly, if I am approved for a max pre-approval of, let's say, $300,000, what price range should I start in? What would you be your advice in that?
My advice, so I do this every single time I'm issuing a pre-approval, is I try and see what the max amount I can get approved for. That is not to say to go in, like you said, $300,000. That's not to say that I'm buying a $300,000 house. This is, for me, I do it so that if you go to see a $220,000 house, and that's what the approval's for, that's not good for a house that's $250,000. So in terms of what price point you should look for, it'd be hard to say specifically, but that's something that I do in my process, I'll drum up different approvals for different amounts and see what makes the most sense for you. But then at the end of the day, I'll have that bigger pre-approval, so that you can, use that for more properties and just to show, as well as if you're going to $220,000 house and you say, hey, my pre-approval's for 300, you're head over heels better than, the next buyer. So
many times consumers get stuck on price range, and what they should really be saying is, what's my payment? Because that's the part that the commitment comes in. How much do you want to pay every month for a house? And sometimes those numbers are pretty far apart. And understanding, let's work toward the payment amount, because a number of things can affect that price range, payment, interest rate, taxes, insurance, all those kind of things. How much do you think you can afford? And I think most consumers come in with that number in mind. Maybe Emily, you can correct me on this, but I think most consumers say, "Hey, it can't be any more than $1,500." Nobody's saying it can't be any more than $3,000. They're saying, "I just want to pay more than $1,500." If the rate's 6, that's one loan amount. If the rate's 8, that's another loan amount. So certainly thinking about that. What do you think of that, Emily? What do you see mostly from your consumers?
In reference to
how much house they want to buy,
Yeah, so I mean, most of them will honestly have the expectation of whatever their parents' house is priced at, that they're like, how can I afford a $400,000 house? So I will tell them, why do you want a $400,000 house? And they say, because I don't want to live in a dump. And then, when that conversation comes, I usually will show them an example of a house that's in the typical first-time home buyer range, 200,000, 250, and kind of base it off of the criteria that they gave me. So if they say I wanted a 3-bedroom with a 1 bath in a basement, I just already know, based off of knowing the market, they can get that for less than $400,000. So that price line that they have in their head, just the list price, that's kind of how I will go about kind of debunking that price that they just have. But they also know themselves. Maybe they do know the type of house that they really want and the bracket that may enter for that area. So it really is about asking them. But when it comes to affordability, and if they see a house or they got approved for 300,000, but they really, looking at the monthly payments, they really need to stay in the 230 range. Then, I will still send them homes that could go that route, a little bit over that. but I just make sure to tell them, your payment could adjust accordingly based off of this. And a lot of times people will think, if it's the difference between a $240 house or $240,000 house to 250, they hear $10,000 and they're like, I'm saving that like right now in this second.
Yeah.
And I have to explain to them, $10,000 that may not make as big of a change to your payment as you may think. So it does work in the reverse too.
Right.
And with that $10,000, I just make sure to say to them, that's not going to be money at hand that you have right now. It's in the long run.
Right.
So if you're thinking, oh, this $10,000, this means $10,000 less or more that I have to put into it. That's not necessarily the case. And a lot of them, a lot of buyers think that they think it's right now, like that money difference is going to be differentiating it right now, when in reality it's long term. So I also, will just have them have it in their heads, if you do want to have a drastically different payment, that we're going to have to be looking at houses with like a $30K to $50K difference to really make like a couple hundred to like $600 difference in your payment.
But run some scenarios, right?
Yes, it really is about running the scenarios and just explaining to them what that money means for right now, what it means for later.
Yeah, I always, when my kids started looking for houses, my son was like, "Oh, I want this house," and I said, "Well, you can have that $370,000 house. You just need $150,000 down payment. Where are you going to get that from?" Yeah, and I think focusing, especially for first-time homebuyers, focus on that payment range, and because that can go up or down based on rates and a number of other things. It's super important. What else can somebody consider when they're shopping for a house? I know maybe lifestyle expenses. Like what other things come into mind when you think about home ownership for somebody and looking for that right first home?
Outside of expenses?
Yeah.
Well, saying lifestyle is very,
Well, you talked school district earlier, so I think that's the number one thing, I think.
I would say looking at your life as a whole. So for my case, I'm out of school now, but, let's say this was a couple years ago, I would have been thinking about how far away is it to school and or work for some people, and are you willing to make that commute from that city? Next, like you had said, I mentioned earlier, is the school districts. Do you have kids? Are they willing to move those school districts? If not, is that area willing to do school of choice, and stuff like that? Or also, family, of course. How far away do you want to be from your family? Some people think they can be farther away than they actually want. And then when we make that drive to that house, they'll say, oh, this is a little bit farther actually than I thought. The drive here, my mind started changing. And, another thing I say to consider is, if you are considering multiple cities, let's go to them. Let's go see them. Let's drive around a little bit. If you're truly on the fence, that's not saying, if you don't know where you want to be at, I would, hone in on that a little bit before we start doing a wild goose chase. But if you have a couple of surrounding cities, go drive around them. That'll make it a really quick answer for you on if you want to be around there or not, and can make the process a lot shorter for them. So I would say, just take into account like what you are literally doing on the day to day. Are you going to the gym? Do you need a gym that's close by? If you are trying to move farther into an area where there's really no neighbors or anything, is there also not a grocery store for another hour? That may need to be something that you consider. So
do most people come to you already with a kind of area in mind? What do you find is really your kind of your experience with first-time homebuyers? Do they come and, I know they would love their parents' home, and that's not really a reality, but do they come and say, hey, I want to live here, but I think I can only afford here? Do they have some knowledge already? Have they done some work?
Some of them. Some of them have done more work on taxes, I would say, is a big thing. A lot of people will already know the taxes are higher here or lower here. And then, but they won't have any knowledge as to what is recently sold around there.
Yeah.
And it may be completely off from what it actually is. So I would say the knowledge kind of varies, but most of the time they have an idea as to the area they want to stay in. They
Yeah.
kind of have a few that they're on the fence about. Usually those are the ones we'll go see like one house in that area, and then it'll be kind of the dictator of if we'll go back. But they usually have an idea because a lot of it, I would say, is based off of how far away it is from their work.
Yeah. Andrew, you've been a trooper hanging out there. What was your experience when you started looking for a house? What did you think when you first contacted your agent or loan officer? What was your experience?
Well, thank you guys so much for having me on. I mean, I would tell you my personal experience was really um, just trying to get the knowledge base, I guess, of exactly what costs were going to be affiliated with getting into my home, what programs there were out there that I could potentially use. There's so much out there. I just kind of felt like I needed some guidance. I needed somewhere where I felt like they were giving me the valid information that I was going to need. And so for me, it was just trying to get that knowledge base, I suppose.
But what was your motivation? Was it, hey, I want to buy a house? I just do not want to rent, or what was your kind of ultimate goal when you went into it?
Yeah, I was more just over renting at that point. I was renting for a couple of years and I was thinking, okay, what's something that I can do? Because I don't want to keep wasting my money at this point when I could put it into a home, gain that equity and use it long term. So I wanted to make sure I could get something as soon as I could, to ensure that I could build that equity over time and maybe even use that property as an investment in the future. So I think the earlier that you can get into a home, I always felt was, the better at that point for me.
And I apologize. I don't remember your exact scenario, but was there a grant catalyst that helped you get into that, or what program did you end up using when you bought a condo,
I
right?
I personally actually didn't use any programs myself, but I do know like some strategies that my realtor used at the time were like seller concessions, and maybe one of you can go into more detail about that. But depending maybe like on how long the home has been on the market or something, you can use that as your advantage to reduce your cost. And so that's something that I believe I used on my home, so that's what I did in particular.
So Emily, he mentioned seller's concessions, but I guess maybe back up a little bit. What are you seeing in the market today? Boy, we went through a period there where it was really a buyer's, I guess a seller's market. They were getting anything they wanted for their homes. I think that's changed a little bit. What are you seeing today in the market?
Yeah, it's definitely starting to level out right now. And buyers are coming out. So they are coming out and they are ready, especially with the rates dropping. And, I would say the days of, having these buyers that are willing to just jump over that price for whatever reason that the seller wanted them to, it's there for the right house. It will be relied on the house and how competitive it is. I don't want myself to say like it's not happening at
Yeah.
all because every house changes. But, with the rates dropping, it's just becoming more competitive as far as, just more people are out there. Pricing wise, I mean, the buyers are there. You don't need to worry about that. More so because they're coming out. But yeah,
Are
is
you
there,
seeing seller's concessions today, or is that
yeah.
starting? It is coming back, yeah.
I mean, I would say I don't think they're ever really going to go away because there's always going to be a buyer out there that may just need help with their closing cost.
Yeah.
So as far as just the market itself and how it's changing with concessions, I really wouldn't say that's going to be as easy as to predict because if a buyer may need it. So they can be used for different reasons. I have some clients, we went through the inspection and there was mold, some of it needed to be remediated. We couldn't see all of it, so we had requested, okay, can we have another 1,000 to possibly remediate this? And the seller said yes. They didn't necessarily need it for their closing cost, but it was something that's going to be tied in for that.
Right.
So again, just relying on the house, and if that situation allows them to possibly repair it that second or not can also change it. In our case, they weren't able to, so we really needed to just secure that there would be an extra amount of money that my buyers would be saving in the long run just to go spend the money for that to fix it in the home.
Well, I think I want to jump in, if you guys don't mind. We definitely talked about MISTA pretty much at length, and that is probably the number one most exciting program as it relates to the history of our webinars. Whenever we have a call on MISTA, certainly our members jump on and enforce. And it is a cool program, and I would say absolutely explore all your options in that. MISTA has a great home website. You can go out and do some self-education as a consumer to look through that. But again, it can seem daunting. So getting with somebody that understands the program. I guess maybe one more thing, Emily, do you see anybody, maybe refusing a MISTA offer on a property? Does it seem less today than normal in a conventional loan? Or how do you see that as less leverage for a buyer using MISTA?
Sometimes.
We talked about the connotation to the program before, right? So what's your experience with it?
So with MISTA, I hate keep saying, it depends, but it does. If you are in a multiple offer situation, the seller may not want to take MISTA. Sometimes there is, some further delays, and they are going to be looking at how fast can you close. So when they are, looking at multiple offers, they may see a MISTA offer, and at the end of the day, the seller wants their money as soon as possible. So if that is the case, there is ways to go around that, though. Just because we close longer doesn't mean we can't change the terms in our offer to make our offer stronger. Whether that be a shorter inspection period or increasing the EMD, there's ways to get around that. But I would just say the closing time can be just slightly longer, but not all the time. I've had lenders where it's the same amount of time and, it's smooth sailing. But that is also where I would say, who you're working with is very important and who you're talking to prior.
Yeah, and let's break that apart a little bit. So MISTA is a bond loan. So it's a loan that Michigan First underwrites fully, and then we send it off for a MISTA review prior to funding the loan. And that sometimes, depending on their turn time, can add a few days on the end or up to 2 weeks on the end. Right now, what is our MISTA turn time right now? Zareen or Kieran, do you know?
Okay. Same day today.
Same day today. So we're all caught up. So today, we don't guarantee we can close a MISTA loan in 30 days or less, but we are closing them in 30 days or less. So today, that connotation. But there have been times that MISTA gets backed up, and they have so many resources that they can do. So it isn't so much that, I think the quicker we can get it to MISTA is where our expertise is and have their turn time clocks start versus waiting till the end of our process to do that. So not a harder loan to do, but there are sometimes a second level review to that can add some time. So you'll hear a lot of lenders will say, oh, well, for MISTA, we need 45 days versus 30. And that really is just trying to set the expectation. But today, that it's closing in the same time frame today. In fact, our average today from what we measure our efficiency is from docs disclosure to ready for closing, because we don't control the closing date, but we're running right around 20 days from the time the loan discloses to we're ready to close. So, and that's including MISTA. If we took MISTA maybe out of that, which runs in the 30-day range, we would be more like in the 19 or 18-day range, which is kind of cool. So MISTA is a great program, and I think we've roasted that one well enough. So let's talk about some other one, Kieran. What about conventional loans? What are some of the other programs you see first-time homebuyers use?
Yeah, definitely. So conventional is always an option.
What does that mean, conventional?
It's just your 30-year fixed rate. You put your regular old mortgage, I guess is what I would describe it as. So
it's your grandfather's mortgage, right?
It's exactly what my grandfather had. Yeah. Granted he refinanced probably 10 times, but so the conventional is it's hard to say it's different because MISTA is just an overlay. So oftentimes if I do a MISTA file, it's MISTA conventional. So conventional is more or less the same thing, just without down payment assistance. Oftentimes, there are things that we can do. I know of someone who has, done a lender concession by getting the rate up to where MISTA is, and then you can take some, closing costs down. But otherwise, I see a lot of conventional that can be 3% down. FHA is another one. FHA's main goal is to expand home ownership in America. And so that is a fantastic program to use, whether that be, one of those programs that also does have a stigma attached to it. It's allowing people to get into homes that, otherwise might not be able to. So I would say the top two are definitely MISTA and conventional. The USDA, I wish I was writing more of those, being in Michigan. I know there's a specific line, but the majority of Michigan is eligible for USDA.
Emily just mentioned Lapeer. Lapeer is in the heart of USDA. Country, so.
And they had a lower rate than conventional the last time I was doing one. And so that's another great program.
And it's 100% financing too. Don't forget that part.
100% financing. Yep, 100% financing. There's tons of programs that you can qualify for. It all comes down to a conversation with someone like me or someone like Emily to really kind of get that information through, and so then we can kind of figure out what makes the most sense for you.
Yeah, so certainly I think exploring all of your options and finding out which one suits your needs better. MISTA, FHA, are all of the lending is very similar. They all start with the basic guidelines and they all allow for different things. And FHA adjusts their allowable exceptions to the conventional guidelines based on the needs of first-time homebuyers. That's why it's designed for somebody that doesn't have a lot of credit experience and get through that. And in some cases can be even a better rate, depending on the scenario that you bring to the transaction. So somebody comes to you, you meet somebody at a social gathering, and they say, "Hey, Emily, I'm a realtor, or you're a realtor. I was thinking about buying my first house. Where do I start?" What would be your advice to somebody? Like, where should they start?
Buyer consultation.
By what's that?
Buyer consultation.
Okay, with you. But where does that conversation lead? Like, obviously you're not going to put somebody in a car and drive them all over Lapeer County or St. Clair County without some idea of what their needs are. So at what point do you involve Kieran or somebody like a partner like that? How does that conversation work?
It does come back down to the buyer consultation, because I will sometimes invite a lender with me. Sometimes we'll do it right on the spot if they are, that ready, and they, let's say if it is at a party, if that's on a Friday night, I will say something along the lines of, "Monday, when are you available to come to my office? And we are going to digest home buying from beginning to end. And we're going to start off with asking you, are you willing to speak with a lender? Do you have any in mind that you want to talk to? If not, I'd be happy to recommend some. And even if they do have one, I usually will also recommend a couple more, because I just want them to know, every lender is different. So you're going to want to check that out.
Options, right? Yeah.
So, there's always a debate. Do you start with the real estate agent or do you start with the lender? But I would say if you're talking to a good lender or real estate agent, they're going to refer the other person, and they're going to have a couple in mind. So, even though I say, come to the office and sit down, or, have a phone call conversation, my next step is always referring them to a lender so they can see if they even can, continue through with the home buying process. And, if they don't want to, then I just say, the best place to start then is getting knowledge on it. So regardless, I still would love to sit down just to explain to you, what is an inspection? What price, should you expect to have to pay for that? What does that look like when, inspection possibly goes bad? Do you have to drop out from the house? A lot of people, think that. They think inspection is pass or fail, even if they have, a conventional loan. And I have to just further explain to them, don't have that in mind. A lot of times it's just, what do you want to be putting up with afterwards? Are you willing to move forward even if the seller won't negotiate on that? And I just say, knowledge is power. So, I don't want anyone to walk off with question marks on, oh, I thought I could purchase a home, but there's just no way I would ever pass inspection. All I keep hearing is houses aren't passing inspection, so what's the point? So, I just make sure that they have the information that they need to actually decide if they have to walk away from home buying or if they can move forward with it. And then, they can kind of base it off of that point. So when they ask me where to start, that's the first thing that comes out of my mouth.
Yeah, let's evaluate and put pencil to paper to figure out what the dream really looks like. Kieran, when you meet somebody for the first time, how do you handle that interaction?
Yeah, I tell them that they're doing the right thing, getting an idea of what it's going to cost first. I couldn't tell you, just outside of housing, the things I've looked at, I've been like, yeah, I want that. And then you look at the price and you're like, oh, never mind. So that's kind of my train of thought with it is, let's figure out what your situation is. Because oftentimes, it's hard to understand. It's a process that, has so many nuances, and to be able to kind of go through exactly what to expect financially, whether that, there's other factors that go into buying a house, but financially is definitely the biggest one. So, being able to talk to me, who can give you those numbers, who knows what's on your credit report and can give you advice from what I've seen and from what I know, I think is a fantastic start. Not to say going to a realtor first is a bad thing, but if you're able to kind of get a better understanding, a more realistic understanding going into conversations with Emily, then I think that process, will be a little bit more black and white for you.
Yeah, and I think. Go ahead, Emily.
Sorry, don't want to cut you off. I was going to say I agree. Especially with, like I had said, if you talk to the right one, they'll refer you to the other person. I always tell them as well, depending on the program, that certain cities may not qualify into that program. So, if they sit down with me and they have the expectation, oh, I'm going to use this one, I do have to, ask them and then go back and ask the lender for confirmation, is this city qualifying for this program? And, some people don't know that. So as much as I would like to say, come talk to me, usually I always say, have you talked to the lender? Yeah. And if they don't want to sit down at my office, I will at least ask them, would you be willing to get in a group chat with the lender? Yeah. So they can, take it from there and, they'll be able to better tell you if this is something you can afford, and then, come back to me and we can figure out, where.
Yeah. And just for anybody listening, when you start this process, Kieran, what is a pre-approval cost with Michigan First Mortgage?
$0.
$0, right? So just your time, just your investment in time. And certainly, Emily, do you charge a fee up front to work with anyone?
Nope.
No. Yeah. So these really are relationships you're starting, and that's the most awkward part of it. Once you get past the kind of the first part and you model match with either somebody like Kieran or Emily, it is a conversation that should be a three-way conversation and get you onto home ownership. So listen, Absolutely. We can talk all day on this. So
if I could say one more thing before we move on, I know Emily and I have had this conversation before. This isn't just one transaction to us. We really do care about what you're doing, where you're going. This is impactful to me to see people do this. And so my goal is to not just, get you across the finish line, sayonara. It's something that I do take pride in, and I want to build that relationship with you.
Yeah, that's great. Wow, we're at the end of our time. And like I said, we could probably talk all day at this. So, I guess if I would ask a couple of follow-ups. So if you think about the takeaways from today, we established that you don't need 20% down as a first-time home buyer. So certainly I think starting with Emily or Kieran and understanding what your options are doesn't mean you have to buy today or even next week or next month. Certainly think about that journey Maybe your goal is to buy this year, and it might be later this year, and maybe the market will be better for you or down the road. So this is not too early to start. I think you guys would agree in that. Know that there are programs for first-time home buyers out there like MISTA that can help you. And the more work you do up front and the more misnomers that you dispel, the less stress you're going to have in this journey. And this really should not be stressful. It should be a fun, investigative journey to home ownership. And I believe everyone has the privilege of earning that right to buy a home. So with that, thank you. Thank you for joining us, Kieran and Emily, on the call today. I appreciate you.
Thank you for having me.
Yeah, we have some information on the screen now that we're here to help you. If you want more information, reach out to info@michiganfirstmortgage.com. All of our loan officers are listed on our website. Certainly, Kieran's information is here. Along with his phone number and his direct email. You can get a hold of him there. If you are feeling that you want to go in, we have 30 some loan officers that can help, and they're all listed out there. Emily's information is there. She obviously is one of the people that is driving the industry change today. So Emily, thank you for joining us. Her phone number and email address is there. Just definitely reach out. And we are super glad that you joined us. We also want you to know that we have an insurance company. And through this process, insurance has become a bigger part of the expense today. So shopping 40 plus insurance carriers, definitely, even to give a kind of what would this cost me scenario, they can give you that without even buying a house. So certainly jump on. You can see their link there. You can take a screenshot real quick, or call them at 866-386-2216. And that is Michigan First Insurance Agency here with Michigan First Credit Union. Wow, what a call. I appreciate you all joining. Thanks, Andrew, for jumping in and offering some perspective, and Zareen for running the call. And Kieran, Emily, have a great day, and we'll talk to you guys soon.
Thank you very much.
See you all.
Have a good one.
Bye-bye.